Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that S&P pushed to another fresh all-time high, leaving the buyers in firm control. At this point, heading into the open, the short-term bias continues to be fairly bullish, but again, ES is trading at pretty elevated prices, and anyone getting involved in a new long setup here is going to need the sustained upside momentum to really carry it higher. So right now, heading into the open, the market is balancing in a narrow range, setting up for another directional move, at least short term. And from here, we could just balance and then launch even higher. There is really no hard resistance above here because these are fresh prices that are being tested for the first time. So heading into the open, we have resistance at 41 to 43, but continued balancing up here could result in a breakout because this is not really a major area of resistance. It's simply based on the overnight session, and then beyond that, the market would be making fresh all-time highs. So again, we don't really have any predefined hard area of resistance. Now, given the recent ranges, by the time the market gets up to 51.5 to 53.5, it would be quite exhausted. And even over here around the 41 to 43, the market is getting pretty overbought. Now, it doesn't mean it can't go higher, but this is not really a great price to initiate a new long. Now, on the day time frame, anyone initiating a long here, like I said, is not doing it because it's a great price. It's only because there is so much momentum to the upside that the momentum can carry the market higher and provide sufficient reward to risk. So that's something you're going to have to gauge off the open is the level of momentum in the market. Because where we're trading right now, it can really tip either way. It can balance up here and then break out again and test some higher prices, perhaps around 45, 46, maybe a little bit higher into the 51 half, 53 half, or it can balance over here and then on the smaller time frames fail and put in a pullback down into the 32 quarter, 34 quarter zone. It wouldn't really take a whole lot for the market to pull back at this point. Just a little bit of profit taking can result in a pullback. So, even though the bias is bullish, we do have to be mindful of the fact that the market is pretty stretched up here, and the reward to risk would be questionable. And if you're taking it based on momentum, then you need to be pretty nimble with managing that trade. So if the reason you took it is no longer there, so if the reason you took it was momentum, and now let's say the market just kind of stalls out and momentum goes away, then it's probably not a great idea to continue holding that type of setup. On the downside, like I said, 32 quarter, 34 quarter can quite easily get tested. That's the first area of good enough support. How the market approaches it and how the real-time situation is setting up is going to determine whether we trade that area to the long side or not. Because even though the area can hold, there needs to be sufficient reward to risk to take the trade, which means that if we're coming down on heavy downside momentum and the other markets are failing up here as well, then even though initial support can hold, it may not be the best spot to get the 2-to-1 reward to risk that we look for, and that's the minimum that we look for. So, be a little more mindful even on taking longs at support because 32 quarter, 34 quarter is the first area of decent support. It's still fairly aggressive. Below that, we have the gap fill at 30 quarter and then the overnight low at 28 half, followed by yesterday's low at 25 quarter, and then 1975 to 2275. Now, by the time you push down into the overnight low, the gap, yesterday's low, and especially the 1975, 2275, now you're getting into support areas that are a little more conservative and can readily provide 2R on the day time frame. So, those are areas where you do have better trade location, and those are potential long ideas. But again, we are going to have to gauge the state of the market in real time to determine whether it's worthwhile to take that long setup or not. But the overall bias clearly is very bullish, and our focus is still going to be more on the long side. It's just that, we don't want to be overly aggressive on the long side. We still want to, determine whether it's worthwhile to initiate a long here because these are fairly aggressive prices. And there could be a short setup on the day time frame today. Something that we'll have to see in real time. It would clearly be counter to the current trend and the current bias, and that's why we do have to see some pretty clear signs in real time to consider initiating a short, and we still need to get fairly decent location in order to trade the market on the short side. And again, we have to be pretty nimble with it. If it's not really working quickly, or if the momentum is not really supporting the idea on the downside, then the market can quite easily just balance in a small range and then put in another marginal high or breakout to new highs. So right now, shorting the market is very much, against the trend, and for that reason, we have to secure good location. We have to see more signs of sellers stepping in, and then we still have to be fairly nimble when managing that trade. So that's just the type of environment we're in right now. Because the market is so stretched to the upside, it's making it difficult to get on board and trade on the long side. And because it's so bullish, it's making it difficult to trade on the short side as well. But that's the environment we have, and we just have to be aware of it and trade it accordingly. I think it makes a lot of sense to be fairly selective up here on both sides. And if that means that nothing really sets up for us on the day time frame, then so be it. But we have to adapt and tailor our execution to the environment that we're trading. So those are the main ideas heading into the open. Keep an eye on the other markets. Nasdaq, Russell, I think they are going to provide a pretty nice heads up. S&P is trading at fresh all-time highs, but the other markets are not. So how those markets respond during the day can provide a heads up on short-term directionality on the S&P as well. So those are the main thoughts heading into the open. Let's see if the buyers can hold ES above here, kind of near the overnight highs. If we continue to balance here, then we could be looking at higher prices. In the event that we get a pullback, we could get some potential long setups on the day time frame today. So let's see if the buyers can really continue this upside move and sustain that underlying momentum, and we'll take it from there.